We are inside the GSN newsroom with the CEO of Sabre Gold Mines, Giulio Bonifacio. Welcome, Giulio.
Thank you very much, Guy, for having us today.
Sabre Gold Mines trades on the Toronto Stock Exchange under the symbol SGLD and in the US under the symbol SGLD.F. They control 100% of two near-term gold producers in North America. And I'd like to start out, Giulio, by getting you to give us a bit of a bird's eye view of Sabre Gold.
Thank you, Guy. Let's start off with the primary asset and sort of the formation of the company or the new company. And it was on the back of a project called Copperstone. It's located in Arizona. A very key point is that it's fully permitted, and permitting in any jurisdiction is very, very difficult. So that was one of the key features that attracted me. But it was a past producer in the late 80s, produced about 500,000 ounces at close to 3 grams, which is a very, very good grade for an open pit. Subsequent operators have stepped in and ultimately defined another 500,000 ounces underground by way of both two areas, the Copperstone Fault and the Footwall Zone. And in both cases, on a combined basis, we're looking at a grade profile that approximates between 6 and 7 grams. There was a previous producer on the project. They started in 2010. They incurred a significant amount of capital to build out the infrastructure. So there's a mill in place, processing ability up to 600 tons per day. So we're blessed with a lot of infrastructure, tailings, underground development, 4,300 meters. And all of that leads us to a situation that is an ability to start a project and put it back into production by way of an amount that is a pretty modest amount of capital. We're looking at about $30 million. We put in place and validated the asset further late 2020 with a streaming facility for up to $18 million, of which we've received 12 to date. So it's a project that we do believe we can move forward in short order. There's a funding requirement. It's not significant, but that's something that we believe we can put in place.
I think it makes sense that Copperstone is your lead asset simply because it is targeted to go into production first. But you've just published a very important preliminary economic assessment on the Yukon project, the Brewery Creek project. Obviously, very good numbers. I want to drill in on that. Can you start by telling my viewers, what is a preliminary economic assessment? What is a PEA? Why is it important?
The idea is to advance the economics to a point where you're reasonably comfortable that you've got a project that is firstly economical. In this instance, I would add that because Brewery Creek was a former producer, the predecessor company, Golden Predator, was looking at putting forth a feasibility study. We made the decision that, rather than rely on what would be a smaller permitting footprint and a smaller annual producing scenario, let's take a pause on the feasibility. Let's go in and do a preliminary economic assessment that captures what we believe the project will look like. Now, first and foremost, that'll help us with the permitting process, but we'll also, if you look at the details of that news, and as well as the study that's going to be filed on CR this week, you'll see that there's just a bunch of different opportunities we can focus in on to add to the resource base. As we do that, we can look at potentially increasing the annual production. The capital cost on a project like this is very modest. Back to your question on a preliminary economic assessment, it is advanced well enough in certain areas because of what was done by the predecessor, but it's also about coming up with a good understanding of the economic profile of this project. And with that information, you can make certain decisions in terms of what further changes can you make to optimize the economics, improve the economics. So it's a first step in many, but at first blush, at $1,700 gold, the returns are significant. At $2,000 gold, now again, if you have a view on gold prices, that also drives the economics and the bottom line. But we do believe there's a lot more ounces to add to this. And as we go through the process over the next couple of years, concurrently do the permitting in the background and on the front burner, continue to drill it, grow it, and then come out with what will be and you can't use the term any longer, a bankable feasibility study, but a feasibility study that we can use as a basis to go out and get the funding that we need to build it. And in a project like this, because it's a heap leach scenario, the capital costs are rather modest by comparison. We're currently looking at about 105 million in capital and sustaining another 18 million. So those numbers are very achievable, if you will, and will prove to be something that we can work off of.
I see the PEA at 1,700 an ounce projects a a cash cost of $850 and an all-in sustaining cost of almost $1,000 an ounce. Can you explain the difference between these two calculations? What does an all-in sustaining cost include that isn't in a cash cost?
As with most things, there's a bit of history on that. I mean, years back, the primary focus was capital costs and what are your cash costs.
Yeah.
And in many jurisdictions, it wasn't completely understood that on any project, there's an ongoing requirement to invest capital. And so when you look at the initial capital number, there's also a sustaining capital number. So if you actually looked at the bottom line, you go, hey, what am I spending on a per year basis operating to operate, recover those ounces? But what am I doing in addition? So, simply put, what further work do we have to do on Brewery Creek on a year-to-year basis in terms of drilling it further, doing the additional infrastructure, dealing with tailings and looking at leach pads and things like that. And so when you look at the cash costs versus the all-in sustaining costs, and it applies very much so in all sectors now, just to give you a different perspective on it. On an underground project, for example, like Copperstone, you have the initial underground development to get those ounces on a per year basis, but you have to continue to develop it underground. So you'll typically see on an underground project, more so than on a project like this, the sustaining number to be significantly larger because there's an ongoing threshold requirement of capital to continue to develop. That's why these type of projects, heap leach type projects are lucrative because the returns can be very, very significant because, your processing and your capital number isn't as significant as you typically would see with some of the larger open pit conventional type operations.
At Brewery Creek, to extract the gold, you're using a technique called heap leach extraction. Can you tell me more about that?
The upside, frankly, is that you can move large quantities of material at what is a lower cost. You create a leach pad, you apply cyanide. The recovery levels are never going to be as high as you would typically see with a conventional operation. For example, Copperstone, by comparison, is whole ore leach, apply cyanide. The recovery levels at Copperstone are closer to 95, 96%. The recovery levels at Brewery Creek are closer to 70, 75%, depending on where we're at within the ore body. So it is appropriate. It is a great way to recover ounces, but you're also able to chase ounces that have a lower grade profile. So when you look at Brewery Creek, its typical grade profile is a bit higher than a gram. You look at that, you compare that to a Copperstone at 6 or 7 grams. That's the opportunity. Leaching is a great way to generate good returns. And we've seen many companies. If you look at Fiore Gold, which got acquired by Calibre Mining recently, their grade profile was a half a gram. And so when you compare it to many comps on oxide type deposits, typically, or leachable type deposits, anything that's north of a gram is pretty good margin. Will give you a very, very good margin.
At Brewery Creek, do you have unrecovered gold ounces on the heap leach pads now?
There is an amount, and if you look at it historically, there was a number that was thrown out of about 250,000 ounces. We have to do further test work. There's definitely gold on those pads that we can recover.
If the majority of locals oppose a mining project, that's usually going to kill it. I know that you have a socioeconomic agreement with the Trondek-Widgeon tribe. That's my best efforts. Can you how long has that agreement been in place? Can you tell me a bit more about it?
One of the key stakeholders, is the Trondek group, and we had continue to have great discussions with them on how they can help us and work with them. They're partners for us as well. I think it's that relationship should never be understated ever, and understanding that it's more of a partnership than anything else is, for me, a key component that should be focused in on.
Mining leaves scars. If somebody told me they're going to, build a mine in Kitsilano, my eyes would go wide. I'd want to know a lot more about that. So I think the key is don't surprise people. Introduce yourself early.
All stakeholders, anyone that's going to be impacted by that, the mine build should be involved in the process. And I think that gets kind of overlooked sometimes. And you'd have some really, really smart people out there that make broad-based assumptions and assume permitting is a seamless process. It's not. They assume that you don't have to involve all the stakeholders.
Final question. When I'm doing due diligence on a client company or any company, I often go to Canadian Insider and have a look what's going on there with the buying and the selling. So I noticed you purchased on the open market 539,000 shares of Sabre Gold late last year, I think November and December. I think it's a significant part of your story, the insider share buying. I mean, conversely, when an insider sells a share, there are legitimate reasons to do that. They may need the money for whatever reasons, for medical bills. I don't know. It's their business. But you can imagine from a shareholder's point of view, it doesn't feel great. It's just like, well, you know more about this company than me. You're selling and I'm buying. So conversely, for us to see that you guys are loading up is nice.
That'll be an ongoing thing. I mean, equity participation and being aligned with shareholders is, in my view, something that people should look at. If you look at, even when I joined the company, I wrote a check for about $500,000 to get a position, albeit at a slightly higher price point than we're at today, but I'm extremely comfortable with that position.
Giulio, thank you very much for your time today. I look forward to continuing to follow the Sabre Gold Mine story.
Thank you very much, Guy. Thank you for taking the time.
Thanks a lot. Bye-bye.